Thank you for returning to another video from Bitcoin Basics. Today, we will be discussing the investment case for Bitcoin. The main question of this video is, what are the properties of Bitcoin that have allowed it to become one of the largest financial asset classes in the world? If you have an answer, please leave a comment down below and don't forget to like this video. And finally, subscribe to the Bitcoin Basics email newsletter using the link in the description to receive a free copy of my Fun Money to Millionaire Bitcoin Net Worth Tracker. Now let's get started. We often compare Bitcoin to gold, as both have the potential to store value and share similar characteristics. Bitcoin is a cryptocurrency with a limited supply of 21 million units, which means that as more people adopt it, the price is likely to increase. Recently, Bitcoin has been gaining more acceptance as a form of payment, with a growing number of merchants starting to accept it. In 2021, El Salvador became the first country to declare Bitcoin as legal tender, providing an interesting case study for how Bitcoin might perform in a national economy. Bitcoin also has the potential to be a hedge against inflation, because it's not subject to the same monetary manipulation as traditional currencies. This is especially relevant in today's economy, where many countries are printing money to provide stimulus, which can erode the value of existing currency. Another advantage of Bitcoin is that it is an uncorrelated asset, which means that it does not move in the same direction as other assets, such as stocks. This makes it a useful addition to a diversified investment portfolio. Unlike gold, Bitcoin is also highly divisible, with each unit divisible into 8 decimal points, which is known as a Satoshi. This makes it much easier to buy and sell small amounts of Bitcoin, something that is not possible with physical gold, which is only divisible into small pieces. Finally, Bitcoin is a digital asset, which means that it is easy to transport and store, unlike physical gold, which can be heavy and difficult to move. Overall, Bitcoin has unique characteristics that make it a valuable addition to any investment portfolio. Bitcoin's limited supply creates scarcity. Bitcoin is designed to have a maximum supply of 21 million units of Bitcoin. This is one of the key features of Bitcoin and was intentionally designed to limit the supply. Additionally, Bitcoin has a mechanism called Halvings built into its code, which reduces the block reward by 50% approximately every 4 years. This results in a decrease in the rate at which new Bitcoins are introduced into circulation over time until they eventually reach zero, which is estimated to happen around the year 2140. The halving mechanism increases the scarcity of Bitcoin, which could potentially increase its value or price over time due to the limited supply. Bitcoin halvings are associated with explosive returns. Bitcoin halving increases the difficulty of mining and will continue until the supply cap is reached. Bitcoin's limited supply makes it immune to inflation, unlike fiat currencies like the US dollar, while central banks worldwide have boosted money supply, leading to the erosion of their currency's purchasing power. Bitcoin's limited supply and increasing mining difficulty over time may make it a long-term store of value and an alternative to gold. The next halving of Bitcoin is expected to take place in April 2024. The price of Bitcoin has historically experienced significant price rallies before and after each halving event, as seen in 2013, 2017, and 2021. Will 2024 be the year of the next Bitcoin bull market? Please share your thoughts in the comments below. Bitcoin adoption continues. Bitcoin was initially used by a small group of tech enthusiasts since it was difficult to obtain and had limited use cases. Merchants did not accept it as a form of payment. However, in the last couple of years, Bitcoin has become more mainstream, and its adoption has grown significantly. Now, merchants and businesses widely accept it as a form of payment. Even if a store doesn't accept Bitcoin, there are now crypto debit cards that work just like traditional debit cards, so you can use Bitcoin to pay for almost anything. Thanks to the development of user-friendly wallets, exchanges, and marketplaces, the technical barriers to entry that existed in Bitcoin's early years have been removed, making it more convenient for the average person. Institutional investors are also showing increased interest in Bitcoin. Hedge funds, asset management firms, and endowments recognize its potential as a store of value and as an effective portfolio diversifier. Sovereign nation-states and both public and private companies now hold approximately $50 billion worth of Bitcoin. The US Bitcoin ETFs started trading a few months ago, and they have already acquired over $10 billion in Bitcoin. Bitcoin development continues to progress. As Bitcoin gains more widespread adoption, there is a growing need to improve its scalability and customize its features. This is where Layer 2 solutions, like the Lightning Network, come into play. By building on top of the Bitcoin blockchain, the Lightning Network offers faster speeds and lower fees for Bitcoin transactions while still maintaining the same level of security. This makes it a promising solution for pushing the boundaries of Bitcoin payment capabilities. Potential hedge against inflation. In the wake of the COVID-19 pandemic, there has been an unprecedented increase in the money supply across the world. This has resulted in rampant inflation, which has significantly reduced the purchasing power of established fiat currencies. Bitcoin has become a crucial talking point in investment decision-making as people increasingly view it as a potential hedge against inflation. The cornerstone of this idea lies in the fact that Bitcoin has a limited supply and is decentralized. Bitcoin is an attractive investment option for investors concerned about inflation. It is not affected by inflationary pressures caused by fiat money supply growth. Bitcoin's decentralized nature makes it immune to economic policies, such as QE or excessive government spending, that could lead to currency devaluation due to its independence from traditional financial systems. Small Bitcoin exposure enhances results thanks to Bitcoin's history of robust performance. If Bitcoin is utilized as an asset that holds monetary value, what role can it play? Bitcoin's low correlation with traditional assets, such as the stock market, potentially makes it a good choice for portfolio diversification. Allocating a small portion of your portfolio to Bitcoin can significantly increase returns while minimally impacting volatility. As you can see on the chart, the 12-year cumulative return for the 60/40 benchmark was 176%. Adding simply a 0.5% allocation to Bitcoin over the same time span increases the return of the portfolio to 198%. If you increase that allocation to 3%, the return jumps to 331%, doubling the return of the original benchmark. Bitcoin's performance history. Bitcoin, despite being known for its unpredictable nature, has outperformed other asset classes over the last 10 years. In fact, it has been the top-performing asset class for 8 out of the past 11 years. Let's delve deeper and examine Bitcoin's historical returns for different holding periods as of December 2023. 1-year return, 156%. 3-year return, 50%. 5-year return, 10,000%. 7-year return, 5,147%. 10-year return, 6,172%. The figures emphasize the phenomenal growth potential that Bitcoin has shown over time, making it an appealing choice for investors who are looking for high returns. It is worth noting that Bitcoin has been the best-performing asset class in 8 out of the past 11 years. How might Bitcoin shine brighter than gold? While Bitcoin shares some similarities with gold, there are differences that make it better. Gold and Bitcoin have distinct characteristics that set them apart from each other. One of the key differences is their divisibility. Dividing gold into smaller units can hinder small transactions. Bitcoin is also divisible up to 8 decimal places, with the smallest unit named Satoshis, making it easier for microtransactions. There is a significant difference in transparency between Bitcoin and gold. Bitcoin transactions are available publicly on the blockchain, which makes it difficult to manipulate or counterfeit the currency. This transparency increases trust in the network. However, gold lacks the same level of transparency. The information related to a gold transaction, including the identities of the buyer and seller, as well as the price, is frequently kept confidential. This lack of transparency can raise difficulties in verifying the purity of the gold being traded, thereby increasing the possibility of fraud and manipulation. Gold and Bitcoin are both potential hedges against global inflation. While gold has been used for centuries, its lack of transparency can make it difficult to verify and track. Bitcoin, on the other hand, offers benefits like divisibility and transparency, making it a competitor to gold and expected to gain more adoption among investors. Well, that's all for today's video. Remember to hit that like button if you enjoyed the video and share this video with your friend who's new to Bitcoin. Subscribe to the Bitcoin Basics email newsletter using the link in the description to receive a free copy of my Fun Money to Millionaire Bitcoin Net Worth Tracker. As always, I'll see you on the charts.